Of you who aren't familiar, we're a streaming royalty company, about $1.5 billion market cap, and we get royalty payments from all around the world. And what we own with Hod Maden is a contract that entitles us to 30% of the profits of the mine. So it's closer to an MPI type royalty, but it's an asset that is going into construction here shortly, and it'll be our biggest cash contributor to the company. So we're pretty excited about it.
Tell us about the feasibility study at Hod Maden.
Yeah, so it's a pretty special mine. This is a mine that it's in Turkey, and they just got their permits a couple weeks ago, their main EIA, and so they're going to be moving into early works here right now. But what's so special about the asset is that it comes right to surface, mining methods and long hole stoping, and it's 11 grams gold equivalent per ton. So whenever you have 11 grams gold equivalent over 40 meters sitting at surface, you're going to make an enormous amount of money in the mining industry. So it truly is a special asset. And the feasibility study that just came out shows that. It shows that once it's up and running, it'll be in the bottom 5% cost-wise of assets in the world in terms of what it costs to produce gold. So it'll be one of the lowest cost gold producing mines in the world. And we're pretty excited to have that as part of our portfolio.
Next steps with it?
Yeah, so the next steps are right after you get your EIA, you go and you get a forestry permit, and then you build the mine. So they're already working on EPCM contractors and long lead construction items, and they're ramping up to go build this thing right now.
Now, Turkey has been in the news just with what's happening with their finances right now. Also, there's you do have assets in South America as well. Can you talk a bit about jurisdictional risk, Nolan?
Yeah, so one of the nice things about being a streaming royalty company is you get to diversify all around the world. So we're in many countries. We've got about 230 royalties all over the world in all sorts of jurisdictions. And if there's one reason that we're in the gold business, it's because we believe that fiat currencies are terrible and terrible investments. And it's just a matter of time until all of them erode the purchasing power of those dollars. And we're seeing it live in Turkey right now. They're printing money, and the value of their dollar is dropping, and that causes a lot of inflation in the country. But at the same time, it doesn't impact what we have, which is gold in the ground that's going to be produced at a very, very low cost and will be very, very profitable. In fact, the fact that they're going through those things, government coffers, if you will. So this is why we own gold. We love gold because we hate fiat currencies.
What are you doing with stakeholder relationships around the mine just to make sure that people are aware of the assets?
Yeah, in terms of you mean people in Turkey and on the ground near the project?
Generally, when you're assessing projects around the world, just regarding stakeholder relations.
Oh yeah, one of the key things, because we don't operate anything, it's being a royalty company, other people operate it, is what we're trying to assess is really two things. One is, what do the locals feel in terms of development in and around them? Are they opposed to it? Do they like it? And really that differs jurisdiction to jurisdiction. It can even differ town to town. So you have to go in and do an assessment of that. But the other thing that we have to really assess as a royalty company is, what is the ability of that operator to manage those social risks in that country? And so there are some countries where we won't invest unless it's this company or that company doing the work, because they really understand the locals, the social issues. And so we're very picky, not just about what country, but it's who are we investing in that country. Worldwide, when I was in it, to about $70 billion today. So we've seen a lot of growth in the space, but what we've also seen is a lot of adoption by mining companies using streaming as a financing of choice. So I would say the demand really has almost outstripped the supply side in the streaming space. So we are right now being absolutely inundated with deals. I would say that even 2 years ago, we'd have about one new deal come across our desk every 2 or 3 weeks. We're getting about a new deal every 3 days right now. And we're drowning, and we're trying to keep up with evaluating all of these things. So So there was a little bit of time in the middle of COVID where it felt like deals dried up and it felt really competitive and IRRs were sort of ground down in the royalty space, but we're not seeing that right now. The equity markets are slowing down. They're getting a lot tighter for people, and it's getting a little bit harder for them to raise equity compared to, say, a year ago. So really, we're not just competing against other royalty companies. We're competing against all other forms of capital. And so the supply of equity capital has dried up quite a bit, and we're actually starting to see lenders be a little bit nervous as well, just not quite sure what's going to happen, especially in the gold space going forward. So the streaming royalty companies are having to step up and provide a lot more capital than they otherwise would. 2021 is, we think, we're working on one more thing here. We think 2021 will be a record deal year for Sandstorm in the history of Sandstorm, and I wouldn't be surprised if 2022 was even more than 2021. So if you want to buy a mining company, there's a lot more risk in mining than there is in buying a streaming and royalty company. Streaming and royalty companies, we get all of the exploration upside, we get the commodity price upside, but we cut out a lot of the downside risks associated with mining. If there's fires, floods, social unrest, and that causes production decreases and therefore cost increases, those are things that the mining companies bear that the streaming royalty companies don't. Streaming royalty companies compared to mining companies, we're a lot more diversified too, because we don't have to operate the mines. We can have 230 different royalties, whereas a typical mining company won't want more than, say, 10, 15 mines. It's just too hard to manage it. So we're a lot more diversified, and we're kind of like an ETF in that way. The reason you would buy a mining ETF is you just want more diversification amongst the mining investments that you've made. So we're kind of like a mining ETF with less risk, but the same upside. So we think we compare very favorably to other forms of potential investments in the mining space.
How's gold looking to you going forward, Nolan?
That's an interesting one. I think one rule of thumb that I've always followed in life is don't fight the Fed. So it does make me a little bit nervous, and everyone's talking about increasing interest rates. Having said that, I feel in my bones that gold, I don't know if it's in the short term or the medium term, it's set for a very, very big run. And the amount of money printing that has been done over the last 2 years because of government overspending during COVID has been astronomical. I mean, in Canada alone, I'm sitting here in Vancouver, and over the last 6 years, our current government has doubled our national debt, doubled it. And now they're printing money to stay on side. And so they're just decreasing the value of their fiat currencies. And I think you're going to see over the next 5 years, gold substantially re-rate and adjust for that. Now, if you're a mining company, that's not always good news, because that re-rating is also going to come with inflation. It's going to cost more to buy all of your inputs and pay your employees and those types of things. But the streaming and royalty company doesn't have those cost increases, but we do get those revenue increases. So I'm pretty optimistic over a 3 to 5 year period. There's a lot of things shifting in the economy in the short term here, so it's really hard to predict what's going to happen over, say, a 12-month period.
There's an alternative that's come up, Nolan, in about the last year or so, and that would be crypto. So if you're worried about the inflation picture, if you're worried about fiat currencies, you have seen interest in that regards regarding crypto. Your thoughts talking to somebody weighing an investment in gold versus crypto?
Yeah, I think there's really two things going on. One is crypto definitely is a competitor to gold to a certain extent. What most people don't realize is that the total worldwide gold market in terms of bullion sitting in vaults and held by various institutions and individuals is still way larger than the crypto market. The crypto market is $2 trillion plus in size, and gold is several $1 trillion more than that. And so gold really is still, quote, the gold standard of alternatives to fiat currencies. One thing that I do like about crypto, though, that I think is in the long run going to help gold is, gold was sort of seen as an old person's. It was the old men in the room, women in the room who would say things like, "We need gold. Fiat currencies aren't very good." And young people coming out of university didn't really understand that. I'll even admit that when I came out of university, I really didn't understand what this whole gold thing was all about. But crypto has just captured the minds and imaginations of all of the young people around there. There's almost not a single 20-year-old that I know that doesn't own some crypto.